Terribly sorry to those of you I came and dragged out of the coffee shop down the back. Are you okay? Yes. And for those of you who are still in the room, you remember when I said I was going to go out and rustle up some people for our first speaker this morning? I know that they're out there somewhere. I started ringing my bell, and as I did, people going like this. And I thought, well, maybe I'll speak quietly instead, and that will get them in here. So well done to all of you. You've done a great job. We certainly had a fantastic night last night. For those of you who live here in Busselton, did you go home and just enjoy a bit of downtime in front of the TV thinking about what you saw? Yes? Yes, we envy you because many of us now have a 3-hour journey in front of us to get back to sunny old Perth. But we're very lucky with the weather over the last few days. I know many of you were out making the most of it this morning with your walks. I wasn't one of them because Stewie had me working. Typical, isn't it? He gets down here to work. I don't know. And we're going to get to work straight away this morning. We've got 2 sessions. The first one's going to finish at around about 11 o'clock. We have a fantastic morning tea planned for you as always. At any point during these speeches this morning, these presentations, if you want to go out, grab a coffee and bring it back in. I think you know the drill well enough now to know that is fine. Please don't wait to the end. If you need to go and get it and come back in, please do. No one will be offended. And then we have our next break, and we're hoping to finish up by about 1 o'clock this afternoon. We've got a great presentation to finish off with, and I would love to see you all here for that. So let's get underway. Stephen Morgan is first up on stage for day 3 of Southwest Connect. Now, this fellow here is from ESG Capital. He's actually the managing director. And ESG Capital advises and guides corporates on ESG and sustainability with a big focus on generating financial, environmental and social value. They work with a wide range of clients from pre-IPO mineral explorers right the way through to the ASX 100 corporations. Steve is here to unpack how those 3 little letters are shaping business and investment decisions and who and what's behind it. Would you please make him welcome?
Thank you. Thanks, Chrissy. Yeah, it's really good to be here. A quick thank you to Stewie and Jackson and the Canaccord crew for putting the event on and giving me the opportunity to speak today. I actually a proud Busselton boy. I did grow up in Busselton, and I must say it's a little surreal because the last time I was in this room was actually for my Year 12 high school ball, a bit over 2 decades ago. So I've had some flashbacks, but got my bearings. But here today to talk about ESG, what it is, its impact on the corporate and investment landscape, and where we see it heading. So it's nothing if not topical. It's full of a really divergent range of views. On one end of the spectrum, you've got large, significant global investors doubling down on ESG. You've got regulators in global markets acting to support the development of an ecosystem for those investors. And at the other end, you've got this sort of anti-ESG movement, which is mainly coming out of the US, where ESG isn't the first thing to be politicized, and I'm sure it won't be the last, but also the outperformance of traditional energy stocks. So you've sort of got these 2 ends and a whole lot of views in the middle. These are some of the headlines from the past 12 months. And, we see ESG as a structural shift, and in some ways similar to, what the internet did for businesses around. And we looked at some of the headlines in the early to mid 90s around the internet, and there was some that were on the lines of the internet will go spectacularly supernova, through to this internet thing will never catch on. So like any significant structural change, some of those will age well and some of them won't. But I think to understand it, it's really valuable to know how it came to be. It isn't a new thing. It's been around since mid-2000s, and around that time, there was a growing consensus in global financial markets that environmental, social and governance issues were playing a really impactful role in terms of companies' value and their ability to compete successfully. So the UN pulled together 20 major financial institutions, and a number of those are on the screen there. And now we're tasked with coming up with a plan to better integrate these factors into the assessment, investment and asset management process. So yeah, the main point from this is that it was born as an evaluation tool for investors, and it's, I suppose, followed a natural evolution to become something that companies can use to evaluate themselves. So what is it? Well, it's best characterised as a data-driven framework that helps stakeholders understand how an organisation is managing and performing on the risks and opportunities around ESG. It's used interchangeably with the term sustainability. They're similar but different. ESG is often thought of as a sort of an outside-in tool, whereas sustainability is more of an inside-out concern with businesses' efforts to and initiatives to manage the sustainability of their operations. And here's, I suppose, an unpacking of some of the examples of the topics that fall under the different pillars. Some of you may be thinking that companies managing these risks is nothing new, and there's some truth to that. But what is new is that the presence of a structured, globally accepted framework to assess them and strategize them and communicate them is. Materiality is a central principle. It's all about financial materiality. Companies don't need to worry about all of these, but it's which are the ones that, if they get them right or they get them wrong, are going to have the greatest impact on the business. And the other misconception, I think, is that it's something that's exclusive to green businesses, and it's really not. It's not an accurate view. It's a way of viewing any company or any investment and how it interacts with those topics on the screen. So the drivers, well, investors were the first domino. Very much a long-term, the long-term time horizons of pension funds and super funds have driven it. A lot of these issues compound over time. Global issues around climate change and biodiversity and the like, and some recent examples of not managing those well and the impact it has on companies. If you look at climate change, AGL, I'm sure you've all followed the gyrations there recently, and if you go back 5 years, their share was trading at $25 and it's now at $6, and there's been a whole range of issues with them. So clearly they haven't managed the climate and energy transition well. And then to pull another one out in terms of data privacy, the Optus hack that happened recently, it's projected to cost Optus somewhere between $1 and $2 billion. So it does have a pretty profound impact on values. What does it look like in action? So as an investor, when you look at a company, how do you know that they're adopting it and integrating it? There's a few different proxies that are listed on the screen. They're sort of split into two. The top four are really around disclosures and reporting and measurement, and the bottom one is around the strategic integration. Greenwashing is a topical subject. That fourth bullet point there. Companies that set ESG targets without a supporting plan, that is the very definition of greenwashing. And it's obviously a focus at the moment for some of the regulators. Just interestingly, we looked at the companies that were exhibiting here this week, and we found that 10% of them had a defined ESG strategy, and they range from 8 million market cap to about 288 million market cap. So there's not many that are doing it, but it's not something that's exclusively for large businesses. And what does it look like for investors when it's in action? Well, there's a spectrum of ESG investing approaches, from purely the integration, which is the consideration of it, right through to impact investing. They're all about delivering financial returns. And as you head sort of towards your right on that table, it becomes more about returns, plus impact. So integration is the most popular. It's about 80% of ESG investing uses an integration approach. And the main distinction is that compared to traditional investing, it's sort of an expansion of the risk lens. So this is an insight into how it's being adopted around the world. This study was done early this year, 1,100 plus institutional and wholesale investors from around the globe, 19 countries, and the total assets under management for the group that was surveyed was 32 trillion. And they were asked to select the option that best describes their approach. So whether it was considered whether ESG was applied or whether it was central, or if they just weren't convinced about it and didn't use it at all. And as you can sort of see, I'm try this, but across those three segments of that column, there's 89% of those 1,100 plus investors use ESG in some way to make their investment decisions. And there's a breakdown of some of the other jurisdictions. So you sort of get the sense that, whilst it varies a bit across jurisdictions, the weight of the capital in this segment's committed. And then the second point that we often talk about with our clients is, if you're a corporate, given these statistics, is your approach to or lack of ESG enabling or disabling your ability to attract capital, particularly in a market where that's tightening a little bit. This is ESG investment growth. The main take from this one is that around 2024, the balance shifts and ESG funds are projected to continue to grow, whereas non-ESG funds actually plateau and then start to decline. And this is a really interesting one. This is, I suppose, proof that it's been tested in the last few years. So here you've got COVID, of course, and these are the early sort of market gyrations of 2022. And what it shows that throughout these patches that ESG funds were resilient. This is European data. It's important to note that. But you can clearly see that there's a resilience, and that speaks to the investors' confidence in ESGs as a long-term risk management tool and value creation tool, and something that supersedes short-term market volatility. And does it work? It's probably the main question most of you have got. Well, the research is still building. Whenever we look at this, we really like to look at a body of work, and so this is from a meta study, a study of studies that looked exclusively at companies that adopted ESG or climate change as part of their strategy, and whether they performed positively, neutrally, or negatively financially. And you can see that those companies that adopted a holistic approach to ESG and integration, there was 58% of the studies showed a positive impact on financial returns, 34% mixed, and then very few showed a negative correlation between ESG or climate action and returns. And this data is hot off the press only this week. So it compares non-ESG funds with funds that have actually been certified for their ESG approach by the Responsible Investment Association of Australia. There's a significant portion of Australian super funds that have been certified by that association. And so they compared the performance of their funds against Morningstar benchmark equivalents over 1, 3, 5 and 10-year time horizons. You can see the results are clear, and it's really quite distinct, the outperformance as you look at those longer term time horizons. And just some insights into what's really happening, some of the issues that are really impacting companies and investors. So climate is a real game changer. Out of all of those topics, it's the one that is really got the most teeth. It's shifting corporate strategies significantly. It's defining investment strategies. And it's also, I suppose, new in a sense that investors are trying to understand and quantify climate risk and the impact it's going to have on their investments or potential investments. And so there's a push to mandatory climate disclosures across those countries you see there. But it isn't just a global thing. That quote from CCI was taken 12 months ago. And it's really interesting. In our work, we work with companies that are small privately owned businesses through to ASX 100 corporations, and there's really impact across that entire chain. This is an interesting slide. So this just shows you carbon intensity of the ASX 200 compared to other developed market indices. So it's obviously incredibly high. So it's the metric tons of CO2 equivalent per $1 million in revenue. And in the ASX 200, it's the best part of double of the next highest in the UK. Regulation is ramping up. I won't spend too long on this, just mindful of time, but in Europe, the disclosure of non-financial data is heading down the same path as financial data. Companies will need to do it, and they will need to have that assured. And the US as well, moving towards mandatory climate disclosures. ASIC have said they're watching these developments closely, so we expect there's some regulatory action in Australia in the next few years. And I'll just pick one of these, but I think Woolworths and the Endeavour Group split. For those who aren't aware, Woolworths had Endeavour as a wholly owned subsidiary. Endeavour owned a whole bunch of pokies by virtue of their ownership of pubs and clubs along the East Coast. Woolworths institutional investors didn't like that, and there was a number of investors that were looking at Woolworths, but it didn't pass the screening test because of the exposure to gambling risk, and so that the decision to split those was made. And happy to talk through the other examples if you want to catch me afterwards. And then lastly, it's a ticket to the game, and lots of battery minerals discussions over the last few days. The bottom line is it's not going to be enough just to have the commodities. You'll need to be able to prove and demonstrate you're producing them in a way that's sustainable. And just to finish off the so what, so it's not going to be a straight line, sorry, but I think the direction is fairly clear from the data I've taken you through today. The weight of the world's capital is really committed to this. Regulations incoming and increasing. For corporates, choosing when to act may be a defining decision, and this is change for corporates, and some will find the opportunities and create value out of this, and others won't. That's all. Thank you.
Hold on, Stephen. Not to take away from the fantastic 15 minutes you just spent demystifying ESG for us in our investment woes. Did you come with a date to the ball that you had here? You did? Do you remember him, her, him, whoever? Yeah. Did you get a kiss at the end? Oh, okay. All right. Anything else you want to elaborate on that? Happy with the 15 minutes there. Beautiful. Okay, you've moved on to bigger things. Dr. Tom Duthy, can you come and join us, please, sir? Dr. Tom is the Executive Director of Neurotech International. This is a really interesting story. I've been following this one, and it's something that affects many, many Australian families. And I'm going to bet when you've finished listening to this speech, you will know someone whom this could possibly be helpful to, and it could be helpful to your investment portfolio as well. So you could be getting a 2-for-1. So, as I said, this is Dr. Tom Duthy. He is the Executive Director, and he's going to present on the company's focused corporate strategy and the development of its lead biopharmaceutical drug therapy called NTI 164. So it's an exciting clinical trial portfolio has been developed for this drug to treat rare pediatric neurological disorders, including the groundbreaking clinical results. I'm not sure if he's going to have the up-to-date details on that, but he's the chief. All right, so he'll be able to fill us in on what has been happening up to date. Would you please make him very welcome?
Thank you. Thanks, Christina, and thanks, Hannaford, for sponsoring what is a really nice program, and appreciate your time and attendance. Thank you. Just the standard disclaimer. So just as an overview, as Christina mentioned, this is what we do. Sort of our focus, I guess, historically, those who have known the company wasn't necessarily and resolutely focused on pediatric neurological disorders, but that's certainly the way we're going now. And there's a number of reasons I hope I can convince you of as to why that's a meritorious endeavour. And from a valuation perspective, I think it offers the most, return for investors over the long term. So we have a proprietary extract from a cannabis plant. I would like to think that we are not a cannabis company. We have a drug platform that so happens to be derived from a cannabis variety. our focus is really to regulate ourselves with the most stringent regulators in the world, and that is the US Food and Drug Administration, that's the European Medicines Agency, and that's the Therapeutic Goods Administration. So with that, there's a lot of responsibility, there's a lot of work, costs a bit more, but what you end up with is a regulated drug with medical claims that you can charge a reasonable amount of dollars on, because the cost effectiveness is high, and also for patients, it's good to the extent that the medical claims are supported by clinical results. This is just a corporate and cap table and summary. I think our performance has been pretty admirable in light of the rest of the sector and more broadly with ASX generally. What I would draw your eyes and attention to is the R&D investment, and also the operating expenditure in the business is $1 million annually. So everything we do goes to R&D. In the sector, if you're an investor in the sector, you don't want that to be a reversal. You want to see the expenditure go to the R&D. That's what matters most. People count for far less, I think, in this situation. It's all about the technology. These are the 4 core strategies that we've now implemented or implementing since I joined approximately 6 weeks ago. So resolute focus on pediatric patients. More particularly, we are focused on rare neurological disorders with what's called Neuro Inflammation. So these are disorders where there's an inflammatory effect in the brain, and that manifests itself in certain disorders, which I'll come to. And we know through extensive third-party literature with respect to cannabinoids and cannabis generally, that they have a very well known and very well researched effect on inflammation, inflammatory processes, and also neuroprotection and neuroregulation. That is, the neuronal cells in the brain are nourished and they are protected from certain inflammatory processes. So the literature is great. That's why I joined. I have a background in the sector, and I like to think that we go into these trials with a really good sporting chance of showing a clinical effect. We also have what I think is a really nice barrier. We worked with key pediatric professors of neurology as our partners for our NTI 164 formulation. They are not going to run trials on pediatric patients if you have an over-the-counter, unproven and poorly manufactured drug product. So that's good. And we're focused on drug development. So these are our 4 sort of core strategies in detail. Pediatric patients overlooked by big pharma, rule of thumb. They don't tend to focus down there. They tend to be unencumbered drug therapy markets. So what I mean by that is there's no standards of care, there's no approved treatments. That's fabulous when you want to run a clinical trial, because you're going up against a placebo or nothing. You're not going up against a standard of care. So we have patients here that are not enrolled in clinical trials, and we have the ability to leverage levers at the FDA, EMA, and so on for these trials. We focus on rare disorders because, as I said, the literature is brilliant around the effects here. And NTI 164, we ourselves have shown that, and we focus on these neurological disorders with a first in man, or first in child, in fact, product NTI 164 for autism spectrum disorder. I've mentioned the clinical focus. I'll just go to the focus on drug development. So we are doing everything right by a drug regulator. We are manufacturing this properly, and that allows us, and it confers on us, premium pricing and reimbursement. You will not get reimbursement unless you have a proven medical claim, period. Commendable effort by the team. We've moved from a preclinical sort of stage into, pro forma 2023, where we have multiple phase 1, phase 2 clinical trials in rare pediatric disorders. I'll come to PANS or PANDAS-PANS. I would guess 99% of people in this room would have never heard of that. It is a rare neurological disorder in children. They basically go to bed and wake up with uncontrolled tic movements and obsessive compulsive disorder, currently untreatable. We have a 10-patient study ready to go for PANS-PANDAS. That is an effect in children that is profound, and moderately to severely ill children would be our target recruitment sort of profile. We also plan to initiate a phase 1/2 study in cerebral palsy, and also I'll come to some results in autism spectrum disorder, but we have also submitted for approval to start a phase 2/3 trial in autistic children next year as well. So that's my experience and career, that is a very rapid transition from preclinical to clinical, and the team's done a fabulous job there. I wanted to just put this quote up because this is the treatment goal for anyone that works with autistic children, and it's basically about enabling the child. So current treatments restrict the child. There's a treatment called risperidone. The role of that drug is to reduce or dampen the aggressiveness and irritability. It does nothing for the child's ability to interact with, to socialize with, and to be a more integrated person in society. We believe NTI 164 is an enabling therapy. That is, we are looking to improve all of these facets, and that is the absolute treatment goal in ASD, and that's sort of where we're focused. This is ASD in a I guess a summary sense. It's much more prevalent than most in the room would probably appreciate. So 1 in 44 children have some form of ASD. The children we're treating on our trial, they have what's called level 2 and level 3 autism. So that's children that require substantial care to very substantial care and support. And as I mentioned at the start, we have a very strong rationale for treating these children. ASD is a neuroinflammatory disorder. It is a chronic disorder. And so our treatment is not a once and done reverse autism and the children are fine. It's an intervention that will be chronically administered. And again, going back to our strategy from a lifetime value perspective on a per patient, that makes it a very likable and high quality drug profile, because the children will need to take this intervention for a long time. If they don't take it, then the symptoms will very much reverse. This was the trial. I won't sort of bore you with this more sort of detailed sort of designations here, but basically 14 children. It was a safety study over 28 days. Interestingly, which gives us some confidence as we continue to treat these children, all 14 children were strongly recommended by the clinician, Professor Michael Fay, and also their parents to continue treatment. So we had envisaged titrating these patients down after 28 days, but as it turns out, all patients continue treatment. And for us, albeit we don't sort of see how quickly the autism returns, what we do is collect a ton of data. And the data we reported in July of 2022 was at 28 days. We are imminently going to report the 20-week data in these children. But what I wanted to draw your attention to is that the fact that 93% of these patients showed an improvement in their clinical symptoms, and that's as measured by the clinician, not the patient or the caregiver. And the severity of illness score, I wanted to sort of just call this one out particularly because the chart, I think, on the right may look complex, but it's a pretty easy to understand goal for us of what we need to do. So 7 is the most critically ill child, 1 is normal, and the orange curve, that's the normal distribution, but the orange blocks here represents the children at baseline, so day 0. And at day 28, we've shifted these markedly to severely ill children to what would be classified clinically as a mildly ill child. And that's after 28 days. So, you know, neuroinflammation typically, if you're trying to dampen neuroinflammation, the longer you can intervene in inflammatory processes, so be it, the patient should get better. So what you should look out for with our 20-week data is you want to see this curve shift a little more to the left. Having said that, from a clinical perspective, that is an extraordinary shift right there at 28 days. And a clinician looking at that would look at the profile and go, that is clinically meaningful. So what does that mean? That in medical parlance means I would prescribe it, and that's important. Just going to our pro forma pipeline, again, what we've tried to do very quickly here is to add depth and breadth. So we're not a one-trick pony to the extent that we have 3 other pediatric disorders that we're looking at. So cerebral palsy, PANS, obviously including ASD. Our milestone, we have a rich vein, to use a resources parlance, of news flow that we expect to have this quarter and also progressively throughout 2023. So these are related to regulatory approvals to commence our trial, completing recruitment of these trials and reporting data from these trials. In the very near term, as I mentioned, keep your eye out for the 20-week data in these children. But I'm very excited and very pleased that we've been able to so quickly take this manufactured drug product and put it into very sick children. This is a summary of our strategy, and what I've done here is try to map out what we're doing and trying to compare and contrast that to what others have done. I'm unashamedly a fan of 2 companies. One's Neuron Pharmaceuticals in Australia. I followed that for 15 years. And GW Pharmaceuticals, because they as well, like us, they have an extract or a highly purified extract of something called CBD, and that's derived from a cannabis plant. That was the first regulatory approved drug in the field. And the way that these companies have created extraordinary value for shareholders is just be really focused. So they both started off, funnily enough, looking in adult disorders. So GW was looking at, I think, MS and pain. So by total addressable market, 20 billion bucks, brilliant. Well, what's your market share? 0.1 maybe if you're lucky and you get through the regulatory hurdles. So what they did is they stratified an epilepsy market. So epilepsy is a non-orphan or non-rare disorder of children as well and adults. And they found two what we would call sub-indications called Dravet and Lennox-Gastaut. They levered those with those regulatory tools I've mentioned. They got approval and then they were required. And similarly, Neuron is very much on the same pathway. And so for us, we have these indications sitting here that we're currently treating, but we have greater potential to look at all these other indications as well, because guess what? The literature supports that there's a strong neuroinflammatory effect in each of these disorders. We treat neuroinflammatory disease, bang, there's your next study. So our outlook, we are focused on rare pediatric neurological disorders. We've shown now that NTI 164 is safe and efficacious at 28 days. Our 20-week data is imminent. We have these accelerated clinical development tools via those deep clinical relationships with professors of neurology, both in Monash in Melbourne and also at Westmead in Sydney. We're driving hard to recruit and treat these patients. It's very likely if the treatment continues to show an effect that we will provide the treatment ongoing for these children. So we will continue to report lots of data over the longer term. So for example, PANS PANDAS is just looking at 10 children over 8 weeks. If it works, those children will continue to receive the intervention. We have that really good clinical engagement. So I think that is one of the best barriers we have in Australia. I'm sure most of you in the room are highly familiar with tons and tons of over-the-counter cannabis formulations in oil, sprays, tablets. None of them have any ability to claim a medical indication. So what's happened in the last few weeks is the Therapeutic Goods Administration has fined 3 companies $1 million for basically promoting their extract, their formulation as treating a medical disorder. You can't do that unless you've got clinical evidence. So the way we do it is to get the clinical evidence by basically manufacturing a product that is fit for purpose from a regulatory perspective. And we deeply and thoroughly engage with the clinicians and their ethics committees at the hospitals. So we love that. So it would be very unusual, I think, from here to see other cannabis companies coming in and working with these same professors in much the same indications. And we have lots of levers at the Food and Drug Administration and the European Medicines Agency. So I will wrap it up and leave it there. And thank you for your attention. Please stop by if you want to have a chat later. Appreciate it.
Thank you very much. Fascinating, isn't it? Absolutely fascinating. The implications that it could have are fantastic. I really enjoyed that presentation. Right. Now, your program in front of you would have had the fact that the lovely Angus was about to present for us about Forrestania this morning. And Angus is unavailable. In his place, we have the absolutely fantastic Mr. John Hannaford. Now, John will be well known to many of you. He is an experienced corporate executive, extensive experience in the ASX resources sector as a corporate executive, an advisor, also a chairman. He is a founding shareholder of Forrestania, and he's helped to lead the company through its IPO process last year. He's been involved with a number of junior explorers. He's very well versed with junior exploration companies. Let's have a listen to him this morning and his take on what could be a big investment opportunity for us. Welcome, John.
Thank you. Thank you, Chrissy. I'm not sure how much of all that is true, but very glowing words. Thank you very much. And welcome, everybody. Really appreciate the opportunity to present Forrestania Resources and the upcoming drilling programs. Also like to congratulate all of the people putting this conference together. I think it's a great initiative and I think it can only grow as the years go by. So thank you everyone for coming and supporting, and we look forward to seeing you over the years. There's the usual disclaimer. But here's an overview of Forrestania. The company listed a year ago, just over a year ago, and mainly around some key key projects. The principal one is the Forrestania project that we acquired as part of our IPO. The key thing I think likely to take away is we've got significant land holdings in Tier 1 WA resources precincts. So that means there's existing mineralisation of significant endowment. We have significant existing major players in all of the areas. We have significant infrastructure, services, and those sorts of things. So we're not spread all over the world. We are in areas where there's major mines have been found, and we hope that will continue to be found. We've got a strong pipeline of lithium and gold prospects, which we'll get to. We've had a fairly active program since listing. A lot of that has been around getting approvals, getting our feet on the ground, getting into the data, and preparing for the drilling programs. And as I'll get to, we're just about to start off our first lithium drilling program. Predominantly, our focus at the moment is in the Forrestania project for lithium and gold. But further, other projects are more focused on gold, and they're a little bit further down the track in terms of their state of advancement. But we'll get into the Forrestania project, which we think has the potential to unlock some significant lithium discoveries and also gold. So we've got a motivated and experienced team on both gold and lithium, which we'll get to, and highly leveraged to exploration success. Here's a bit of a snapshot from a corporate perspective. We're just in the process of completing a 2-tranche share placement at the moment. So the shares on issue after that will be completed is 69 million, which we think in this market is very modest and very tight, and we'll have a low market cap and will be cashed up to deliver on these programs. So obviously we know that the lithium thematics at the moment, there's a lot of big numbers being bandied around. With this market cap, we think any discovery is going to have a significant influence on that for us, and then give the support in the market to be able to push on and develop something. So a great opportunity. Up until now, we haven't been able to say when we will be drilling. I'm pleased to say today we announced that we are starting our drilling campaign in Forrestania with the drill rig about to start drilling its first hole. So it's exciting times for us and exciting times for investors. The team, when we started, that was really a team around the founders and a gold-based exploration team. And David and myself on the corporate side, Billy Higgins is one of our founders. He is a gold geologist, currently working as the exploration manager at Capricorn Metals. Has a significant, both Billy and Ashley Bennett worked together at Northern Star, where they found significant granite-hosted gold discoveries, and we'll get to that. That's the part of our gold exploration strategy. Angus Thompson, the CEO, he's a geologist. The reason I'm here is he's up on site with the drill rig, so unfortunately couldn't be here, but exciting times and has to be on deck there. And Mel McClelland, been a fantastic addition to our team, as I'll get to, some really pertinent experience, having worked for several years with Kidman Resources when they developed or discovered and drilled out the Mount Holland lithium project, which is right next to our major lithium exploration targets. So a really experienced team, and we're looking forward to getting to some results. So just onto the Forrestania project. I'll spend a bit of time on this because it is something to take away in terms of our ground position in a Tier 1 district. So this is the Forrestania belt. I'll come around a little bit here. We're surrounded by majors, and we have dominant other majors. North in the blue, that's the Prevailing Winds, which is joint venture between Westfarm and SQM. That's developing the Mount Holland lithium project. Now that Mount Holland 190 million tonnes of 1.5%. Lithium, that is world class. Nothing short of world class. They've discovered when they found that, they discovered 100 metre into 1% pipe. So it's a massive system. So when we acquired the project, we acquired all this ground in orange there. Since we listed, we've added some underground here as well as application. So we're right up against that major system. Further south in purple, that's the Western Areas project. Significantly, they're nickel focused. They have all the grandstone belt to the south. Our projects are both sides of that. However, what is significant there is that they are not focused on lithium. They do have lithium on the ground, which I'll get to. But the big IPO has taken the Western Areas. This has become a much more active exploration area. So we have what's called the Goldilocks corridor, which is just off the greenstone contact. We have 100 kilometres strike along that contact. That is significant. We believe we have one of the best exploration, lithium exploration tenement packages in Australia. Now, obviously, we've got to prove that threat by making a little bit more prospects. So that's, I think, one thing I'd like to take away here is that we've got the only other major holding in this belt. There's obviously very, very highly mineralized with nickel, with gold, and with lithium. And we think there's a significant opportunity to uncover more major deposits. And as I said, we're drilling. We announced today that the drill rig is on site and starting to drill the first prospect, which is in the north here, which we call Bounty East, which I'll get to. The main areas for us are in the north, Bounty and Gem prospects, and then also in the south, down south, Iron Cap, Bannon, and there's a major lithium system we think developing down here. So I'll run through our major lithium prospects that we're looking to drill. And given the time, I think we'll just focus on them, and then we can come back to the gold a bit later on. Just a bit of a pipeline of prospects. Obviously, it's a big area. There's big areas. There's lots of prospectivity, and we've got a lot of work to do. But this just gives you an idea where we are at the moment. We drilled. Oops, hang on, back. Wrong button. These are the four lithium prospects at most advanced that we will be looking to drill, starting this weekend and then further into later this year to try and test four major prospects. On the gold side, there are some major prospects there as well. We're not aiming to drill them just at this minute, but they do present a fantastic opportunity for shareholders when gold starts to finally come out of its slumber. So this is just again to illustrate the proximity to the Earl Grey deposit. Earl Grey is this prospect here. You can see they built an airstrip and there's tailings dams and so forth. That was discovered when they found pegmatites in the gold in the Bounty gold mine, and Kidman acquired all this ground as part of an acquisition of Bounty, mainly looking at gold. They then discovered lithium and they became very fixated on the prospectivity of lithium there. What we're looking at is what we're calling Bounty East, just over here. And this prospect, significant, I suppose, in what they didn't find in the previous drilling. These pegmatites and our expert advisors have been telling us it's all about the pathfinder anomalism. And the pathfinder elements you're seeing here, tantalum, beryllium, cesium, and rubidium, very sort of lesser known, but in these LCT pegmatites, they're quite significant. Because if you can find the pathfinders, then you're onto the lithium at some point. What Mount Holland found here, or Kidman when they're drilling Mount Holland, is that the lithium that's in the shallower zone, what we call the weathered section, had all been leached out. It's just a fact of nature. So they were finding no lithium, but they had pathfinder elements in the system. All their lithium starts at about 60 plus meters deep. So what we're looking at here with our Bounty East prospect is to drill deeper than the previous explorers had done. Now they had drilled some shallow holes here. They found all the pathfinder elements. They found pegmatites. They didn't, and it's different times, a different corporate strategy perhaps, but they decided to walk away. And our lithium exploration team, headed by Mel, who was part of this exploration team, she said, well, this is where the lithium potentially is. So it's a fantastic opportunity for us to prove this theory. We're out there drilling this starting this weekend. And obviously, if we are able to find anything of the similar to Mount Holland in terms of the scale of the pegmatite system, then we're onto something quite significant. So this to me we're finally, after 9 months, been able to announce that we're going to be drilling this. So it's a magnificent time for us. And the fingers are definitely crossed, toes are crossed, but a great opportunity for us to find something else of scale. The second prospect we're looking to drill is the Gem Cutter and Gem Mine. This is a little bit further south. You can see on here that we're just a bit further south from Mount Holland. Now, the previous owners of this tenement package, they drilled a fantastic hole, 34 metres at 3% lithium several years ago, and that's up in this part of the tenement. And this, I think, is a good illustration of this weathering that happens to lithium and these pegmatites. That is the early stage. That is pegmatite, but there's no lithium. And the deeper section of the hole where they found the 34 metres at 3%, as you can see, it's quite a different type of mineralisation. That is indicative of what's happening across the belt with this weathering. We have approval to drill a prospect down here we call the Gem prospect. I know I'm running out of time here. And that's what we'll be drilling as the second prospect to try to indicate, again, a deeper opportunity or deeper extension of those pegmatites. I'll touch also on our southern prospects. There's two main prospects, Bannon and South Iron Cap. Bannon prospect is right next to the western areas ground here. It has been drilled. There are significant pegmatites, but without that high-grade lithium. We're going to retest that prospect as well. And the other major prospect, which we are hoping to get approval by the end of the year to drill, is the South Iron Cap East, and significantly here on the western areas tenements, where I said they had not been focused on lithium. They have a 50-metre intercept at 1% lithium here, and 1K away we're finding outcropping pegmatites that have never been drilled. So significant opportunity. Obviously, if we find something here, it opens up a whole new lithium exploration field in the south, and we're hoping to get approval later in the year to drill that one. So I'll just come through with the gold. Anyone keen on the gold, come down and see me at the booth. We're quite excited about it, but market's not really giving us much for it. Again, through the gold. So the work program and highlights, we've got several projects we're drilling later, starting this weekend and later this year. And then we'll have a lot more regular drilling and workflow. There's a lot of environmental and heritage work going on, which has continued. That gives us next year's drilling targets and exploration programs. The overview, as I said, unlocking an emerging lithium belt. We've got a strong pipeline, lithium and gold focus, but we are in a major system, a major area, and we've got a major tenement package. So I think if you hold on and you can jump on board Forrestania, it's going to be a very exciting ride. So thank you very much, and look forward to maybe having a chat at the booth later.
Good on you, John. Well done. I think everything they said in that little bit was true, even if it was sent through by yourself earlier yesterday. No, not really. We're going to change gear again. Before we do that, though, I just wanted to have a bigger shout out to everyone who is watching online at the moment. We've got about 240 people watching online. Great to have your company. A reminder that if you can't do as John has just offered to everyone, come and have a chat to him afterwards so I can flesh out the details. The contact details are on everyone's presentation or on their website, and they're more than happy for you to ring them personally. Hello. Now, this is going to be an interesting discussion. I'm going to, how old are you exactly?
Early 40s.
Early 30s. Oh, so some of us are on the other side of 50. And we keep getting these, I don't know about you, but I keep getting on my Facebook things about silver splitters and, you know, things of that ilk, you know, I do dye my hair. And it was interesting because they're all talking now about this thing called MDMA-inspired therapies for people with, you know, getting through marital issues when you're in your silver splitter years. And I thought, oh, that's interesting. How do they do that? And when I read the intro for this bio today, I went, well, here might be one of the ways that they can make this an ethical trial rather than going to a corner shop and trying to do it themselves. There's some really interesting information come, because it made you laugh, if nothing else, and you'll remember this fellow here. It's going to be an interesting talk. So let me introduce Dr. Michael Winlo. He is the CEO and Managing Director of Emyria Ltd. Now, they are a clinical stage biotech, so clinical stage. And they're developing treatments for mental health, neurological conditions. They've developed a range of proprietary cannabinoid-based pharmaceuticals and leading an MDMA-inspired drug discovery program. So importantly, they're also managing a network of specialist medical clinics, and that provides them with real-world data that supports their drug initiatives. So to tell us more, would you please welcome Dr. Michael Winlo.
Thank you, Chrissy, and good morning, and thank you so much for coming here in person and joining online. I've been really looking forward to telling you the story of Emyria and why I'm so excited about our prospects in developing new treatments for neuroscience and mental health. Let's first start with a story. This poor chap suffers from Parkinson's disease. 7 million people are affected globally, making it the second most common neurological disorder after Alzheimer's disease. It's characterized by depletion of dopamine, which is an important brain neurotransmitter, and untreated leads to this slow movement, trouble starting movements, obviously difficulties with one's activities of daily life. You may know somebody personally with this disease, and if not, you probably have certainly heard of Muhammad Ali or Michael J. Fox, two famous people who suffer from this condition. Fortunately, there is a treatment for Parkinson's disease. It's L-DOPA. In fact, its discovery was so remarkable, they made a Hollywood film about it, starring Robin Williams and Robert De Niro, called The Awakenings. This treatment gets your movement back, but over a period of time, it itself can lead to a movement disorder, and you can spend a lot of your time with those kinds of wriggles and movement challenges as well. And so this gentleman who you saw in the previous video, he's also shown here. His name's Tim Lawrence. He's a stuntman based in the UK who made a pretty remarkable discovery one night. On the left here is day one. This is what he normally would look like untreated. So he hasn't started his L-DOPA treatment yet. And you can see he has great difficulty reaching for that cup and taking a drink. A little bit later, here you'll see his L-DOPA has now kicked in. So his movement has certainly improved, but he's got those discoordinated, jerky movements, which is a byproduct, a side effect of that treatment. Now on the right, you might be wondering what's going on. He looks completely normal. And on day two, he's taken another dose of MDMA or ecstasy. And he actually discovered that this was almost cured his condition after a night out at a nightclub. Now, the trouble is, the reason that Tim doesn't take this drug every day is because it makes him high. He doesn't want to be out of his mind, even though it might be improving his movement. And so that led to a journey of inspiration and discovery at the University of Western Australia. And I'd love to take you through that story. But first, what is MDMA? You probably have heard of it as ecstasy or the party drug. It is currently an illegal amphetamine. And I do want to stress that the MDMA that we're talking about is medically developed. It's ultra pure. The stuff that you get on the street is notorious for being not what's advertised. And so I do not advise anybody to go to their dealer to treat your Parkinson's disease. Stick with the medicine and give us some time to come up with a treatment for you. But MDMA is really fascinating. It releases three primary neurotransmitters. Serotonin, you might have heard of, related to feelings of well-being and lifting mood. Dopamine, which is the depleted cause, creates that Parkinson's symptoms, and it's related to feelings of pleasure and satisfaction. And noradrenaline, which is related to attention and fight or flight. And so when you combine these three neurotransmitters together, you get these great effects: increased alertness, positive mood, and very strong pro-social effects. But of course, you get that persistent euphoria too. So the smart guys at UWA thought, well, what if we could take MDMA as inspiration, this structure here, make some modifications and see whether we can remove the euphoria and actually retain the positive sort of dopamine effects that led to those positive symptoms that you saw from Tim's video. And through a series of really innovative experiments, they're able to develop a compound called UWA-121, took it through a gold standard primate studies, and we're able to more than double the improved symptoms without the hallucinogenic or the psychoactive effects of MDMA. A really remarkable discovery. But there the project stalled for many years, unable to get funding until Emyria teamed up with this group a year ago. And that's begun a terrific journey of discovery inspired by this remarkable compound, MDMA. So why do we love MDMA so much? Well, mainly for its chemical properties. It is a small and stable molecule that gets into the brain, which is often something that's quite challenging to do for new drugs. We know that it has many points of diversification. So we have the opportunity to make lots of different kinds of changes to that molecule and get different effects. We also know that it's already active on important brain targets, and we can tune the selectivity to create therapies for a range of neurological conditions. And so here are our opportunities and where we're focused. Adjusting this molecule to create shorter treatments, we can avoid some of the toxic metabolites, and we can try and tune selectivity to remove the high from MDMA and make it an important medication for conditions like Parkinson's and also other major mental health disorders. So our program looks like this. We're starting with MDMA. We're creating new analogues based on its structure. To date, we've created more than 140 novel analogues. We've actually synthesized, created, and screened these compounds. We think it's the largest library of its kind in the world. We're now taking it through a series of important preclinical screens and creating lead programs in a number of important indications. But we're also interested just in the euphoric properties and pro-social effects of MDMA as well. And one of the more interesting areas where it's being studied today in depth as an adjunct to psychotherapy for major mental health disorders like post-traumatic stress disorder. The qualities that give this drug a great reputation as a party drug, increased feelings of well-being, sociability, decreased feelings of fear and defensiveness, also make it a great adjunct in therapy and can make therapeutic psychotherapy more durable and effective. And in a really profound study concluded last year, a phase 3 study working with patients suffering from post-traumatic stress disorder, they're able to show that just up to 3 intensive sessions with MDMA alongside psychotherapy, that more than 2/3 of the patients no longer met the diagnostic criteria for PTSD. These patients were effectively cured from their PTSD. And each of these patients had an average of 14 years of treatment-resistant post-traumatic stress disorder. So these kinds of studies alone are creating tremendous interest, not only from the clinical community, but also from the investment world into the potential of compounds like MDMA. And we feel we have a really great lead on this program. Our MDMA program is also one of the primary reasons that we took support from Andrew Forrest's private health fund, the 10 Mile Fund, launched earlier this year, and we are one of their first portfolio companies as well. But that's not even the most perhaps promising or immediate way that we are going to return value for shareholders. For the last 3 years, we've been working on an advanced cannabinoid delivery platform using ultra-pure CBD in a solid capsule form. And so what we're aspiring to be is the story of GW Pharma, who spent 20 years, $2 billion perfecting the refinement of their plant-based CBD so that it could be evaluated as a small molecule at the FDA. That's a really important distinction. And eventually this company, as you've heard maybe a couple of times, was purchased by Jazz Pharmaceuticals for $7.2 billion last year. And so the key takeaways from their story, their successful story, is that drug registration can create tremendous value, but you need really pure product and you need great evidence behind your indication. And so we've developed a fantastic product. Rather than an oil or a gel cap or a dropper, we know our patients prefer solid oral dose forms. And so we've created a solid capsule that can improve the delivery of CBD, ultra-pure CBD with no impurities in the bloodstream. We know that it can deliver higher dose values in the hours 3 to 8, where you want your treatment to be working most effectively. And in a head-to-head comparison with Epidiolex, we showed a number of other distinct advantages. We've also got really great evidence, and what gives us such strong convictions that we've got a good read on where cannabis works most effectively is because for the last 3 years, we've been managing our own network of medical clinics, which have been intensely focused on gathering important clinical evidence on where cannabinoids work most effectively. And that data helps us answer what dose forms patients prefer, what indications cannabinoids work most effectively in, and what doses are most effective. And so that data is supporting a really aggressive global registration program. We're starting first with over-the-counter opportunity here in Australia for the symptoms of psychological distress. But because our dose form meets the FDA purity standards, we use a lab-created CBD, not a plant-grown. So we have full reassurances on its purity. We can take that dose form to FDA and Europe as well. And so we can expand our geographic reach. And through our data and our ongoing clinical trial programs, we can also add additional indications and dramatically grow the commercial value of that program. We've also continued the innovation on the cannabinoid front and have a really remarkable product, RX7, which we're targeting for a range of prescription indications. And in a preclinical model, we showed that we could get 4 times the bioavailability of Epidiolex. So we're really excited about that as well. We're starting to attract the interest from some major global players as well in partnering with us, taking these drugs forward. So key investment highlights. First of all, that ultra pure CBD tech with the purity to take it to FDA and beyond. We're in phase 3 clinical studies already for RX5, RX7's coming up behind. We've got great real world data that continues to grow through our clinical service. And now we've built a remarkable R&D pipeline with the MDMA inspired drug discovery work we're doing with UWA. We've also got a world-class team to get us across the line. A couple of highlights here. Professor Sir John Tuke in the middle up the top, knighted for services to medicine, an expert in learning health systems, has been a great advisor on how we set up our clinics so we can get them most with our patients. And Dr. Karen Smith up in the top right, you've heard the name Jazz Pharmaceuticals mentioned a few times. Karen was the ex-chief medical officer and global head of R&D at Jazz, and has been on multiple boards with major billion-dollar acquisitions. And some other folks here with experience in capital markets, clinical medicine, and in my own case, data analysis and clinical trials. The register is quite tight. Like I said, got the great support from the Forrest family there, and 7.3%, tightly held register, and most importantly, a tremendous program of work to look forward to over the next 12 months. On our phase 1, RX5, we've got the phase 3 study, which will conclude. That'll allow us to register that treatment as an over-the-counter at TGA and then beyond. We've got the RX7 program entering into phase 1 early next year and pursuing a number of prescription indications. And on the MDMA program, multiple preclinical activities that will read out and help us choose the most promising leads for commercialization. So I hope you follow our story. It's just getting started, and look forward to taking your questions out in the front. Thank you. Yes.
See, interesting, isn't it? I was thinking all those things that kept popping up in my feeds where you're talking a little bit, slightly a little bit of a rubbish. But when you see it and you see the possibilities, it could be a lot of money made out of this, because I know I would like to kill my husband every second day. And if I could have something like that and it would get rid of fear and anger. No, that was being very, very, do you know what I mean? So we're going to change gear again, and we're going to go into the world of battery metals. And this next one is an interesting Chemex. David Leavy, would you like to come and join us, please, sir? He's the managing director. So Chemex is an advanced materials technology company, and they're focused on providing critical materials required for the electrification and decarbonisation of the global economy. And the company is involved in several projects. I'm going to let David tell you all about each and every single one of them and maximise his 15 minutes. Would you please make him welcome, everyone?
Thanks, Chrissy, and also thanks to the RIU team for putting on such a great conference. And welcome to a presentation on ChemX Materials. The standard forward-looking statement, which you can read at your leisure. Or you can read it now. Whoops. We'll go back to where we should be. Yep, so we're there. Right. We'll get it right in a minute. So we'll just start from here. ChemX Materials is a materials technology company focused on using the best of both mining and chemistry to deliver the critical materials needed for the energy transition and decarbonisation markets. We've currently got 3 projects in the portfolio: high purity alumina, the Jamison Tank Manganese Sulphate project, and the Kimber-Kaolin Rare Earth project. But before we get into the details on those, just a quick word on sustainability. Sustainability is at the heart of what we do. The markets that we're selling into, the electrification, decarbonisation, is really the heart of the market that we're selling into. And the buyers in that market demand that we take care of the environment and the communities we're operating in right from the start. So we're at the enviable position of starting our project development, and we're able to put the sustainability framework as we develop those projects. The 3 projects that we've got, high purity alumina, we'll get into a bit more detail about what these markets are. The Jamison Tank Manganese Sulphate project and the Kimber-Kaolin and Rare Earth projects are all very much focused on selling into the lithium battery market supply chain and also into the EV space. The key component of all of those markets is really the marketing. So we've already started the engagement with global cathode manufacturers, EV manufacturers, to get our product out there. And as we heard with the previous presentation, high purity for anything in a battery space is really key. So we need to know what the specs are that the buyers are looking for. High purity alumina is a well-established and very fast-growing market. It has 2 main uses. One is as a coating on the separator between the anode and the cathode in the lithium battery. You can see the graphic there, the toilet paper roll looking graphic is a HPA coated, or you may have heard the term ceramic separator, which sits between the anode and the cathode, provides operational benefits to the battery in terms of cyclability and also safety in that it helps manage the thermal management of the battery. The other key market is synthetic sapphire. Synthetic sapphire is used in a number of high-tech uses. The key ones, LED lights, semiconductors, micro LEDs, but it's also got some exceptional optical qualities. So for those of you that have an iPhone, the camera lens in your iPhone is sapphire. If you've got a thumbprint reader, that's sapphire as well. The technology that ChemX has developed, the high pure HPA technology, is significantly different from the existing production technologies. It's much less energy intensive, and therefore it's a greener process. But the key differentiators, it's scalable. So we can start off with a relatively small production capacity and grow as demand for our product increases. So we don't have an overhang of production capacity. We believe it will be lower cost, both operating and capital cost. And importantly, it's independent of mine production. So we don't have the time or the cost of a mine project development while we're trying to also develop a high purity alumina process. Because it's not tied to a mine production, it's modular in nature. So we can put production facilities close to the end users. So the strategy would be to supply the Asian region out of a facility in Perth, but then also put production facilities in Europe and in North America so that we can supply those battery supply chains as a domestic supplier. That reduces the carbon footprint of the logistics chain because we're not shipping it halfway around the world, and also the risk of supply. The technology we've got is also capable of producing multiple products. So there are a number of grades of high purity alumina. The main grade is what we call 4.9s or 99.99% pure. And that generally goes into the battery separator market. And then the high purity 5.9s or even 6.9s going into optical and the sapphire market. The technology is also able to produce aluminium sulfate salts, which is an input into the cathode of lithium, of some of the lithium batteries. The technology is groundbreaking, and so we've got a patent application working through the process at the moment. Just the development of the technology, it's been worked on for the last 3 years. Since listing, we've developed a micro plant to take that technology from the lab into a continuous process. And because it's a novel process, as with any chemical process, there's risk in scaling up. There's unintended consequences. So we've taken the decision to have 2 stages of plant with the micro plant, and the next stage will be a pilot plant, which will be about 50 tonnes capacity per annum, which we're in the process of starting the design work at the moment. And then moving on to the commercial plant once we've got the pilot plant established. So the key parameters or the key milestones we're looking for, we need to prove that the process can produce a 4.9s grade product, and we've got some material in with the laboratory at the moment. Then we work on the 5.9s product. We get the detailed design work done for the for the pilot plant, and then we start construction. So the next 6 or 8 months is going to be very busy for the high purity technology. For the Jameson Tank Manganese project, so the Chemex owns 100% of 2 exploration tenements on the Eyre Peninsula in South Australia. The Jameson Tank Manganese project has had a fair bit of exploration done for it by the likes of Western Mining and BHP, but they were looking for a direct ship grade manganese project. Now, we don't have the scale to compete on a direct ship manganese project, but it is a perfect size for a manganese sulfate project. And importantly, for any project development, the Eyre Peninsula is very well serviced in terms of infrastructure. So we've got renewable energy, wind farms, power farm, solar farms, roads, rail. We've got port facilities. We're about 120 kilometres southwest of Whyalla, which is a well-established mining and steel town. So we've got the services and we've got the people. So everything you need for a successful project development, we've got on our doorstep. And why manganese? Manganese is a key component in the battery cathode chemistry. You can see on the graphic on the right there, that's a list of some of the various battery chemistries that are actually in production at the moment. Everywhere you see M, that's manganese. So it's involved in a number of different battery chemistries and provides a range of benefits for particular purposes. So each one of those battery chemistries is designed for a particular purpose. Why are we so bullish on the use of manganese? There's been a number of car manufacturers and battery manufacturers, including Volkswagen and Tesla, who have come out over the last couple of years and said that they're looking to increase the percentage of manganese in their batteries. The main driver for that is security of supply. So with nickel and cobalt production capacity limited, and certainly nickel sulfide is very hard to find outside of Western Australia, they're looking to move towards a material that is available. Manganese itself is a $20+ million tonne a year market, which is most of that goes into the steel industry. Only a small percentage goes into the chemical space and into batteries. So the real bottleneck for the industry is not so much the availability of manganese, but it's the production capacity for manganese sulfate. So that's where Chemix is working hard to help overcome that bottleneck. We've undertaken one stage of metallurgical test work, our initial program back in May this year. It came out with very encouraging results, and we're undergoing the second stage at the moment. Now, the purpose of the current program is to come out with a battery grade or cathode grade manganese sulfate material, which will allow us to start negotiations with potential off-takers. The outcome of this test work will also enable us to develop the flow sheet, and then that will lead into an engineering study. And we've got another exploration program planned for the first quarter next year. The Kimber Kaolin Rare Earth Project, it's located on the same tenement as the Jamison Tank Manganese Project, just further to the north. So we've got the same infrastructure for any project development that we undertake. Kaolin mineralisation has been known in this area for the last 50 years. We undertook a drill program earlier this year and discovered that we had rare earth associated with the kaolin. So that came out of left field. We weren't expecting that, and has really changed how we view the project. So we've got material in with ANSTO, the Australian Nuclear Science Technology Organisation, to work out the best way of separating the rare earths from the kaolin, and that will really guide us on how we develop this project. Kaolin itself, it has a number of uses. It's a 30 million tonne per annum market. It's used in things like ceramics, paper coating, rubber, fiberglass. There are a number of traditional markets. One area that we're doing some work on is the use of kaolin in the Portland cement manufacturing process to reduce the carbon footprint of that process. So cement manufacturer globally is the 7th largest emitting industry of CO2. So we're looking at how we might use kaolin to replace part of the limestone in that process to reduce the carbon footprint. So the development over that one, we've got to wait on the results from ANSTO. And again, we've got a follow-on drill program planned for the first quarter next year. So over the next 12 months, with 3 active projects going on, we've got a lot of news flow. We've got a lot of key milestones coming up in the path to development of each one of those projects. As with any company, it's really it's the people that make it. Our board has a range of experience from project development to operations to corporate governance and corporate activity. And similarly with our management team, very experienced in the markets that we're operating in. They've all gone through project developments, a strong history in battery and the battery supply chain. So we're well qualified to deliver on the projects that we're looking at. So in short, ChemX, we've got the right people, we've got the right projects, and we're selling into the right markets to deliver sustainable long-term shareholder value as we develop our projects. I think I'm running short on time, so if you've got any questions, I look forward to seeing you in the booth. Thank you.
Thank you, David. Oh, all our technology is against us at the moment. Thank you, David. Right, we're going to move on. We've got 3 more presentations to listen to and get some insight into before we break for morning tea. Now, West Australian focused mineral exploration company Miramar Resources is next up. They've outlined a potential camp-scale gold discovery at their Gidgee joint venture project. There's a recent visible gold from diamond holes at its Glandor project, and is it true there might be diamonds lurking in there somewhere? This person is going to have all the answers to these questions. Would you please welcome Miramar's Technical Director? She's a geo with 25 years of experience under her belt. Would you please welcome Marion Bush?
Thanks very much, Chrissy, and good morning, everybody. Thank you for being here, and thanks Vertical Events for the opportunity to present Miramar Resources this morning. I only have a limited amount of time to speak this morning, so please do download our presentation and you can enjoy things like our disclaimer at your leisure. But there's also some projects I won't be able to speak very much about today, so there'll be some bonus slides at the back that you can have a look at. So Miramar Resources, reasons to invest in us. We are just over 2 years old, having listed on the Australian Stock Exchange in October 2020. We are a junior exploration company with a diverse portfolio of exploration assets based here in Western Australia. Our assets cover a variety of different commodities and are at various stages of exploration, from concept and application through to bedrock testing. If I go through, oh, I can't really see here. So if I just give you a snapshot of, I'm only going to be able to present on 3 of the projects, but down, I don't want to, oh, sorry. Oh, here we go. So down in the Eastern Goldfields, I'm going to talk about Glandor, where we currently have a diamond rig, following up on some historic significant gold intercepts in diamond core. Gidgee, where we've spent majority of our time, and we think we're uncovering a potential new gold camp. Up here to Onslow, just outside, sorry, Whaleshark, just outside of Onslow, where we have some large IOCG, so iron oxide copper gold targets. What I can't present today on is our Bangamore Projects. It's a large land holding prospective for nickel, copper and platinum group elements. Down here, Langwell, which is prospective for gold, and we have some pegmatites, which potentially could hold rare earths. And then back down here, our third project in the Eastern Goldfields, Randalls, which is prospective for gold and has a Silver Lake haul road running through the middle of it. Our board have a track record of discovery and production. Our executive chairman, Alan Kelly, was one of the founding directors of Dore that found and went into production with the Andy Well mine. And we are active explorers with regular news flow. We're very proud of the statistic that 75% of what we've spent to date has gone directly into exploration. So if it's there, we feel we're giving ourselves the best opportunity to find it. I won't spend too much time on this. The main thing really to point out to you is just our EV. It's very low. It's very low, especially considering the amount of projects we have and the potential those projects have. So focusing on in the Eastern Goldfields, we have 3 projects. They're all strategically placed close to infrastructure and close to existing gold operations, which means there's a variety of different avenues for development for these projects. The Gidgee project, oh, wasn't meant to do that. The Gidgee project, where we've spent majority of our time, is it's got a 15-kilometre strike length across the Barara Shear Zone, which is a major regional structure. It's got some fantastic neighbours, Paddington to the north, Barara to the south, Kanowna Belle to the east, and of course Mount Charlotte and the Super Pit just down here to the southwest. This is only 15 kilometres outside of Kalgoorlie, and we were really surprised and really lucky to be able to get this one. Glandor, that I'm going to speak about next, it's been historically explored by Anglo Gold Ashanti and Harmony, and they intersected in diamond core some significant gold intercepts, and we're following up on those at the moment. It's covered by a salt lake. And then down here at Randalls, which is has potential for gold in a folded biff. Oh, going backwards, I'm really not very good at this. So looking at Glandor. Glandor is just 40 kilometres outside of Kalgoorlie. It's based largely on a salt lake, and as a result has been largely underexplored. It is very similar, we think, geologically to Majestic and Trojan. So it's associated with these late-time granitoid intrusions that we have up here. It's very close to existing or planned processing facilities down here by Black Cat. So having a bit of a closer look at Glandor, and not to go too geological on you, but it's a layered mafic sequence intruded by a granitoid. That's the big pink thing in the middle. And originally it was explored and they were looking at more of a Granny Smith model. So looking at gold around the outside of the granite. We, in September last year, did a broad-spaced air core program filling in some of the gaps where they hadn't drilled before, and we've outlined a 5 kilometre long air core anomaly of anomalous gold. And it's also given us a different framework for what we're looking for. So rather than around the outside of the granitoid, we think that the gold is actually intersecting, much like Majestic and Trojan and Imperial, it's actually inside the granitoid in these northeast trending structures. We recently did a drone magnetic survey there, which has really helped to inform some of those structures. And we currently have a diamond rig just here at Glandor East, where the historic intercepts are. And that magnetic survey has really helped to inform our positioning of those holes. And here we've drilled 3 holes so far. This is, we've had assays back from the first hole. This is the second hole where you can see visible gold, and the assays are still outstanding. If we focus just on Glandor East, where we're drilling, it was originally a 1.2 kilometre long air core anomaly. Diamond drilling to date has been sporadic, and what we're trying to do here is with our new model, we're trying to create continuity between the drilling and to also flesh it out a bit more. So in this section here, you can see gold occurs in supergene layer at the top, but it's also dipping off to the west here. It's open at depth, and it's also open at strike with a lot of strike potential. So we have 3 holes we've drilled so far. The first 2 had visible gold. The first one we have released we have the results for, and we had just under a metre at just under 14 grams a tonne. We've seen visible gold in the second hole, and we're waiting for the results for that. And the third hole looks really interesting too, and we're waiting for the results for that. And we've still got the drill rig there doing a few more holes. This project has real potential to be developed quite quickly. Looking at the Gidgee JV project, if you've been to Kalgoorlie and you've been to the Broad Arrow pub, you've driven straight through the centre of our project. It has the Goldfields Highway running through the centre of it. As I said before, we've got some great neighbours, Paddington and the Super Pit down here. It's just 15 kilometres outside of Cal, and we were really surprised when we picked this up, just how little exploration had really been done. It also, as normal course of work, we do multi-element geochemistry with all the air core drilling we've done here, and that's mainly to inform our geology, but it's also told us that we have nickel potential here. Having a closer look at Gidgee, as I said before, it's got a large section of the Barara shear zone through it, which is a major regional structure. It's really very, very exciting. We think we are uncovering a potential new gold camp here. So what I mean by that is gold in multiple structural settings in multiple lithologies, which is pretty exciting. And just down to the south here, there is a deposit. So Northern Star, I should probably tell you this, abut us just to the south, and they have a 300,000 ounce gold deposit there, which they've just started drilling again. So there's something happening at depth there, and we think it's continuing onto our ground. So if I have a look at, and we're working through this, it's a large package. We're working through it with RC. We've done some diamond too, but we really haven't done a lot of bedrock testing. So if I zone in on this area where we've done a lot of work in just here, and then I'll talk briefly about this. So in this area, I just want to give you a sense of the size of these air core anomalies. So Marylebone, where we've had some cracking grades, it's like a 2-pronged sort of thing. It's got a 1.6 kilometre strike length, and we've had grades up to 13 grams a tonne. Down here at Blackfriars, It's 1.4 kilometre long strike length, and we've had grades of up to nearly 12 grams a tonne. And then down here at Blackfriars and Highway, we've had multiple 2 gram a tonne hits. Looking at Barara North, we had this granted in like the last year. So we've just conducted our first air core program here on the shear zone, and we're waiting for the assays back from that. And we also have identified 2 other targets, Lake and Claypan. Lake is some historic significant gold RC intersections, and just to the south here are some old gold workings and open pit. Moving on to Whale Shark. Whale Shark is based just 40 kilometres outside of Onslow. Fantastic location if you like fishing. It's in the Ashburton. It's a Proterozoic biff underneath, intruded by a granitoid, underneath the sediments of the Carnarvon Basin. And the sediments deepen out towards the coast here, but we're under around 150 metres of sediments here. It's a really good location. There's a lot going on in Onslow now. There's a port just here. Hastings are in the area. And we also have MinRes are building a great big haul road right past our front door. Caused us a few problems at our recent drilling program here. So last year we conducted 2 soil sampling surveys here called mobile metal iron surveys. So they are designed to, it's really low detection survey. And because we're surveying the transported cover, it's similar to what they used at Havieron in the discovery of Havieron. And we outlined 2 anomalies, 2 coincident copper rare earth anomalies. And we've just completed our first drill program there, drilling through the Carnarvon basement sediments down to just hit the basement. And air core assays are outstanding on that. Oh, wrong button again. This is a slide just to pictorially show you that we have a variety of different projects at a variety of different stages. And I've spoken about Glandor, Gidgee and Whale Shark. Oh, I'm really bad at this. But what I haven't had time to tell you about is our Bangamore projects. But again, if you download the pack, you can get some information at the back. These are prospective for nickel, copper and platinum group elements. We're really pretty excited about those. One of the targets there, Blue Bar, this one, we've just recently found has in some historic reports, has a very significant find of micro diamonds there. I haven't talked about Randalls, where we also recently, just outside of Kalgoorlie, where we recently completed a drill program. We're looking for gold in the fold hinges of a biff there. That has a Silver Lake haul road or Silver Lakes haul road running through the middle of it. So very good potential if we found something there that someone might be interested in it as well. And we've just completed a air core program there, and the assays are pending. And then Langwell, which is an 8 kilometre long historic gold anomaly that we haven't been able to get on the ground there yet. And we've also recently discovered it has a lot of pegmatites on it that could have potential for rare earths. So just in summary, we're serious explorers. We like to put as much of our money as possible into the ground. We really think we've got some fantastic opportunities here with more than one project. We currently have assays outstanding on our Gidgee North Air Core program, our Whale Shark program, which could be a game changer at our ISCG project, our Randalls, our first pass drilling there across the fold hinges of the biff, and also ongoing drilling at Glandor, where we're seeing visible gold. We have a track record of discovery and development, and we've got regular news flow. So thank you very much for your time. I've finished with 40 seconds to go. And if you have any questions, please come and see us at the booth, or please drop us a note through our website anytime. That would be great. Thank you.
Well done, Marion Bush. That was a very good, great presentation as well. Now, Lithium Energy. Lithium Energy was one of the most successful IPOs in 2021. This fellow is Pete Smith. He's the Executive Director of Lithium Energy, and he's here today to tell us why they believe that Lithium Energy stands out from the rest of the battery minerals companies that have presented to you this week, and why you should jump on board with them. Please make him welcome.
There we go. Thank you for being allowed to present here and to greet everybody. Looking into the audience, there's a bit of the morning after the night before, and I would like to thank Hannaford for a lovely evening last night. We're here to present fairly quickly. We'd like to let everybody know what we're up to. We're uniquely positioned for the energy transition. We've got a fairly major lithium project over in Argentina, and we have graphite in Queensland, Australia. We listed in May last year at 20 cents. And if you have a look at the way that we're moving forward, it's a fairly steady progression. And we're currently trading in and around the high 115 to 120 sort of range. As I mentioned before, we have two principal project commodities, lithium and graphite. They're obviously, they're very important ingredients in the lithium-ion batteries. And I'll give a little bit of a summary of where we're at, starting off with the lithium. We're currently drilling our first hole in the project. It's going extremely well. We've announced, I think yesterday, that we'd actually have gone through the upper aquifer of two aquifers that we're targeting, and there's a 173 metre intersection there. So we're quite excited about that. The project's actually located probably in one of the best addresses in the world for brine lithium. It's in the lithium triangle. We have extremely good neighbours in the likes of Lithium Americas and Allchem. We're snuggled up against the boundary of the Allchem leases, and we're only 15 kilometres from their production facilities. So, the address is right. We're drilling our first drill hole. We're hitting the aquifers that we were hoping for, and we're just starting to get some assays back, which are highly encouraging from the top of the first aquifer. So as you can see here, I'm not too sure if we've got the first part of the hole. One of the problems that we have in this project is that there's a freshwater and a brine. So the freshwater, we have an obligation to keep separated such that brines don't get mixed up with the freshwater. So we actually cement when we're drilling the top part all the way down through there. And then we start diamond coring from beneath that transition all the way down. So, how do we know where that intersection is? We've done a lot of geophysics prior to drilling our first hole, and at this stage, the transition zone we're able to pick up extremely well. So, we can transition through, cement off, and then start drilling the lithologies that we're after, which in this case are predominantly sandstones, and sandstones are highly porous, and they're the sort of things that make production fairly easy, because you don't have to have as many boreholes down to actually extract the volumes of fluid that you need to extract down. So we'll just go down through here. The sandstones pretty much start from there. We go all the way down through here until we come to a seal. That distance there is 173 metres. So it's predominantly sandstone, and we call it our upper aquifer. There's a seal, a mudstone seal, which is in through here, and that essentially separates the top aquifer from our main target, which is down here, which is another porous sandstone. And then we're expecting basement round about this depth down here, round about the 380 to 400 metres. But if we keep coming across sandstones, then we'll keep drilling until we come into basement. So, but it's going to be in that sort of order based on the work that we've done with the geophysics. The assays that we've had so far that have come back are really from this top portion up through here. We had some leakage round about the top with some of the fresh water, which we've now cemented off. And the assays are in this part through here, and they're about 400 ppm, which is a good start considering that's at the top of the sequence. As we get the results back from further down through here and down through here, we expect that they will probably increase. So the first hole that we're currently drilling is really part of a 10-hole program. It's probably a minimum of 10 holes. If we get enough joy and excitement, then we'll probably increase the number of holes that we're drilling. And these holes the first one is located just here. And then the others will be more up in this sort of area up in through here. The idea is, as a first pass, to get an idea of the overall size of what we're looking at. And I think get an overall size, you look down here at the scale. So we're looking at a very large area, anything up to about 25 kilometres from one end of the project area to the other. The drill holes will be nominally about 5 kilometres apart. So again, very, very broad spacing. We're trying to find out what the overall scope of the project is in the initial first pass. The exploration target that we have is between 1.5 to 8.7 million tonnes of lithium carbonate. And we've got some grade ranges there, which are grade ranges which have been developed from the other exploration companies and mining companies that are within the same salar. So our grades will end up being of similar to the level. Exactly what level it is, we don't know yet. We're still drilling. Our principal target is this zone down here, which is our deep sand unit. And then we've got the upper target, which is initially thought to be mostly muds with interbedded sandstones. And the location where we're drilling, there's an awful lot of sandstone there. So that actually bodes well for the size of the aquifer. It's a little bit thicker than what we were originally interpreting as well. So that's a bit of a bonus as well. This is where we're at in the current drill hole. We're near the edge of the salar. There's a boundary fault that comes up through here. And we're down at this level now. So we're getting close to the bottom, and we're still in the right sort of rock. So that's quite promising. We're then going to head up to this neck of the woods over here. And here the brines are interpreted to be quite a bit deeper, but also quite a bit thicker. So, the big targets are up in this neck of the woods. So we're looking forward to getting onto drilling those. We're trying to scout down some extra drill rigs so we can actually speed up the process and have a number of drill holes on the go at once, because they seem to be taking a little bit longer than we anticipated. And that's predominantly due to the drilling conditions, which we're having a lot more sandstones than what we originally were expecting, which is a good problem to have. The next steps is to try and fast track. We're obviously trying to get another drill rig for the 15 or the 5,000 metre drill program. And the aim is to come up with a maiden JORC resource. The geophysics has pretty much been completed. We've got a model, and we're working on putting that together and updating it with the drill results as we go. So these are some of the people on the team. That's William, he's currently over there, and some other people of the team. So that's Paula, and that's Esteban. So we also give conferences in country, and this is the drill rig in the afternoon. So we keep a fairly clean site, and we like to make sure that as best we can, we're operating to Australian sort of safety standards. The other project that we have is a graphite project. It already has an inferred resource on it. It's a highly high grade, I guess, graphite deposit. It has a JORC resource of 6.3 million tonnes at 16% total graphite. It's got a higher grade portion, and we're looking at doing some more drilling before Christmas, which we'll be able to focus more on that higher grade zone, which is over 20%. So as you can see from the section here, it's relatively well behaved. It's near surface and it's wide. So, and the grades are quite strong. It's got a combination of flake sizes from fine to large and to extra large. And we've been working through the various processing options. And at this stage, the work that we're looking at is putting it fairly square in the middle of the battery market. So, you know, the best processing options is looking like the graphite market, and we've had CSIRO doing a lot of work for us over the last year and a half. So there'll be some more news coming on that in due course as we try and get a drill rig on the ground before Christmas. As I mentioned, you know, there's been a fair bit of work done with this, and we're looking at the possibility of having a PSG. PSG is purified spherical graphite. It's essentially the format that the battery manufacturers like to actually have their batteries in, or the graphite for their batteries in, and then they put their special coatings. It's sort of like the KFC, you know, special spices. They all have different combinations of technology, which they don't tell anybody about. But in essence, they coat over the PSG products, and we're looking at the option of having a PSG plant relatively local to the project, whether that is in Townsville or whether that's in Mount Isa or Cloncurry. We're going to do some studies, and we'll find out from those studies where the best place is. The other project that we have there, which we have yet to drill, is the Corella Graphite Project. These are some results from an EM survey that we did. Yeah, and essentially the more conductive the material is essentially where the graphite is. So the graphite is quite conductive, and it's a very good proxy. So the near surface, we're getting quite a scattering of graphite content, but the real location where the thickness is of the graphite is actually where these colourful zones are. So essentially the red blobs, and we'll be going in there and drilling those hopefully in the near future. Excellent. So the board that we have is quite a varied board. We've got the chairman, which is William. He's very much a hands-on guy. As I said, he's currently over in Argentina. We have Farouk Khan, who's presently here today with a legal background. I've got myself, exploration background. We have a company secretary and Victor, and to assist us over in Argentina, specifically with the brines, we have a technical consultant called Murray Brooker, and Murray's highly experienced hydrologist with 31 years in the industry, and he's compiled a number of JORC compliant and Canadian compliant resources specifically on brines. So we're very happy to have him working with us, and his knowledge is very much appreciated as we go forward. In summary, lithium is well positioned to take advantage of the forecast global growth and demand for key battery minerals in lithium and graphite. We believe that we have a fairly strong technical team, and we'll be expanding on that in the near future. So if you have any questions, I know I'm just about to be shooed off. So come and see us at the booth, and we've got some gifts there, including some llama gifts, as some little llamas. So if people want to find out what that is, that's good. Come along to the booth. In addition, we've got the prize that we're giving away. So we'll probably do a draw on that in the last end of the session. Okay.
He's bribing us. I'm open to a bit of bribery at the end of the session. That's fine. Right, we have one more to go before we break for morning tea. This fellow up here, full of energy, ready to go. Got a lot to get through, haven't you? I should be quiet and sit down. I've got to go through. This is Roger Mason, everyone. He is the Managing Director of Antipa Minerals. Now, Roger has been the Managing Director since 2011. So he's got his 10-year-long service. He's pushing forward further ahead. He's made a heck of a lot of discoveries in that time. If I go through, he's got the Patterson province, that was 2.1 million ounce caliber gold copper deposit, defining total combined resources, approximately 4.3 million ounces of gold, 226,000 tonnes of copper. There's the 1.8 million ounce, do I say Minyari Dome?
Minyari, that's
Minyari Dome gold copper deposits, and they're currently the subject of a pre-feasibility study. So he's got a lot to talk about and a lot to interest you in. Please make him welcome, everyone.
Thanks, Canaccord. Thanks for the introduction and thanks everyone for your time. This is our standard disclaimer. Look, Antipa's combined exploration and project development portfolio covers a massive 5,100 square kilometres, and it's located 400 kilometres east of Port Hedland in Western Australia. To put that in perspective, our ground holding is roughly the size of Bali. Our belt scale portfolio consists of 4 complementary large-scale growth projects, including our flagship 100% owned Minyari Dome project, which in combination with our 35% owned Citadel Rio Tinto joint venture project hosts the majority of our 3.8 million ounce gold equivalent attributable resource and 2 significant advanced development evaluation assets. We also have 2 farm-in projects covering more of this tier 1 geology, which provide advanced exploration optionality, fully funded by our major partners, Newcrest and IGO. Antipa's market cap is around $93 million, and we are very well cashed up, having recently raised just over $12 million. Note the strong strategic 27% cornerstone to our register, which includes our major shareholder Newcrest with 10%, institutions with 10%, IGO with 3.4%, and the board with around 4%. The Antipa board has 190 years experience, which includes many greenfield discoveries, project evaluations, mine developments, and productions for multiple commodities in multiple jurisdictions. Our board has a proven track record of value creation for shareholders. The recently announced scoping study for Antipa's 100% owned Minyari Dome project highlights the potential for a significant standalone gold development opportunity. And this has fundamentally repositioned Antipa by highlighting a potential pathway to transition from exploration to becoming a producer. The project boasts a resource of 1.8 million ounces of gold and a mining inventory of 1.1 million ounces. This development opportunity is strategically located in WA's Tier 1 gold copper Patterson province, close to Newcrest's Telfer processing facility. A drill program with the objective of delivering further significant resource growth to boost the project economics commenced in June, and the pre-feasibility study commenced recently. The scoping study delivered an initial combined open pit and underground mining inventory of 21.4 million tonnes at 1.6 grams per tonne for 1.1 million ounces of gold, generating a pre-tax NPV of $392 million at an internal rate of return of 34%. The project's initial processing life of 7+ years at a throughput of 3 million tonnes per annum delivers almost 1 million ounces. We have an impressive 168,000 ounces per annum for the first 5 years of the project life.
The all-in sustaining cost is just 1,475 Australian dollars per ounce of gold, and the pre-production capital cost is $275 million, which has a payback period of 2.5 years. The study used a gold price of 2,430 Australian dollars per ounce, and it's worth noting that the current spot price of gold adds $160 million to the project's free cash flow. Critically, this is just the beginning for our Minyari Dome project, with the project economics hugely leveraged to future resource growth. And that will come from both brownfield extensional targets and greenfield opportunities. So we are drilling to unlock this full value potential. Strategically, the project is located just 35 kilometres from Newcrest Telfer 22 million tonne per annum processing facility, which by 2024 will have huge spare capacity. However, a standalone Minyari Dome development is our preferred case. There are 3 key levers with the potential to boost the project's value. Firstly, clear and substantial upside to the project's life via further down plunge resource extensional targets at both Minyari and Waka, growth and incorporation of nearby satellite resources, drill out of recent discoveries, and new major discoveries across the project. Secondly, further exploration success delivers the potential to push back the final years of low-grade ore stockpile processing and materially boost the project economics. And thirdly, additional project optimization, including potential copper and cobalt byproduct output. That'll be investigated via further metallurgical test work targeting improved byproduct recoveries and concentrate grades. The project offers significant resource growth opportunities, and so we kicked off a drilling program in June and currently have 2 rigs on site. Our objective is to materially increase the open pit and underground resource and extend the project life by 2 or more years. This Minyari deposit long section shows the distribution of the resource, which is hosted by 50 to 200 metre thick breccia bodies, which start at the surface and remain open down plunge below a depth of 670 metres. Also note where, relative to the Minyari deposit, the top of the 5.5 million ounce Havieron deposit is located, which is 430 metres below barren cover. Minyari is analogous to Havieron, and these intrusion-related deposits deliver serious endowment, comparable to De Grey's Hemi deposits, with Havieron delivering 5,500 ounces per vertical metre and Minyari 3,300 ounces per vertical metre. Keep in mind that for typical gold deposits, 1,000 ounces per vertical metre would be considered high endowment. Intensity and grade of these intrusion-related breccia-style ore bodies can increase rapidly, and so drill testing of the high-priority Minyari plunge target and also the Minyari North target are currently in progress. In addition, the project offers significant resource growth opportunities from advanced prospects and high-priority exploration targets, including 4 soil geochemical anomalies, all within proximity to Minyari. Last year, we made multiple greenfield discoveries, several of which delivered maiden resources, which we aim to increase by the middle of next year. Several other discoveries, including Minyari North, have maiden resource potential, which we aim to deliver via the ongoing drilling. These multiple discoveries highlight the shallow resource upside for the project and also the mineral camp style setting. The scoping study's positive findings led to the commencement of a pre-feasibility study with the objective of propelling Antipa further toward a development decision on a standalone mining and processing operation by late next year. The growth drill program with the objective to further increase the resource and boost the project economics will deliver an updated resource estimate around the middle of next year for incorporation into the PFS mine schedule. There is so much more to the Antipa story, with 3 additional complementary growth projects, which are huge in every sense of the word. Huge belt scale combined exploration area totaling almost 5,000 square kilometres. Huge partners, Rio Tinto, Newcrest and IGO. Huge partner combined funding requirements of up to $115 million. And huge tier 1 gold copper discovery potential. Antipa currently owns 35% of the 1,200 square kilometre Citadel joint venture project with Rio Tinto, exposing shareholders to a significant slice of serious upside, including the potential development of the 2.1 million ounce calibre gold copper deposit and exciting greenfield discovery potential, all less than 40 kilometres from Rio Tinto's tier 1 Winlo copper gold development project. Citadel hosts resources of 2.4 million ounces of gold and 162,000 tonnes of copper, of which Antipa's slice is currently 1.2 million gold equivalent ounces. Rio Tinto are fully funding the 2022 exploration program, which is focused on greenfield copper gold discoveries and the ongoing evaluation of the potential development opportunity at Calibre. The objective being to identify future feed for Winlo's proposed Winlo plant. Our third project is the 1,500 square kilometre Patterson farm-in project with IGO. And I would like to take this opportunity on behalf of Antipa to once again offer our sincere condolences to Peter Bradford's family, friends and colleagues. The project comes to within a few kilometres of Winlo and surrounds our Minyari Dome project. And IGO need to spend $30 million to earn a 70% interest, and in addition must free carry Antipa to the completion of a feasibility study. Currently, Antipa still owns 100% of this project. The Patterson project has a greenfield discovery focus for nifty and Winlo analogues, the objective being high-grade copper discoveries to satisfy IGO's future-facing strategy. This year, the project's multifaceted exploration program has been identifying additional greenfield copper gold targets, including 2 exciting coincident gravity magnetic targets, with drill testing commencing soon. In addition, early next year, 2 Havieron analog targets just along strike from Winlo will be drill tested. Our 2,200 square kilometre Wilkie farming project with Newcrest comes within a few kilometres of both Telfer and Havieron. Newcrest need to spend $60 million to earn a 75% interest. Currently, Antipa still owns 100% of this project. The Wilkie project has a greenfield discovery focus for gold-rich Havieron and Telfer analogues. The objective being to discover new ore sources within 50 kilometres of Telfer's 22 million tonne per annum plant, which is rapidly running out of ore. All this culminates in a huge amount of discovery-focused exploration across our belt-scale combined portfolio in a province which over the last 7 years has delivered greenfield discoveries totaling 16 million ounces of gold and 3 million tonnes of copper. In wrapping up, Antipa is emerging as a potential tier 1 gold copper business with several investment catalysts. Minyari Dome project's significant standalone development opportunity fundamentally repositions Antipa by highlighting a potential pathway to production. A pre-feasibility study for the project is being run in parallel with a resource growth drill program aimed at extending the project life and significantly boosting the project economics. And with a total spend across our 4 projects this year of approximately $15 million, another Patterson Province Tier 1 discovery could just be around the corner. Look, thanks everybody for your time. We do have a stand or table outside there if people would like to come and ask questions. Thank you.
Thank you very much, Roger Mason. We're going to go and have a half an hour break. And when you come back, we've got gold, gold, gold and more gold investments and the company behind a life-changing dental and knee implant technology. So that'll be interesting.